What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Royal Caribbean Cruise with the ticker symbol RCL. This was a viewer's request, and thank you for the donation. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So this looks like a bull market, or at least a bull trend. So prices have been rallying since July of last year up until now. So this is clearly a uptrend. Prices are above the EMA and prices are making higher highs, higher lows. So let's look at for some potential targets. So we had one leg up right here. Prices sold off, made the second leg up, and you can see that prices sold off again and it couldn't go any lower. So that tells me that we can possibly see another leg up higher. So these two first legs would be one large leg, and if I drag this over, you can see that this measure move was met and we're still going higher. So if we're still going higher, I can use a more recent leg like this one right here, and that would tell me the prices are targeting the high 80s, and that coincides with this prior resistance. You can see there's resistance at this horizontal line. You can see that's where prices sold off. That's why it's resistance. The price cannot get through it. So we're approaching that resistance, and there might be an opportunity for prices to break it, because in the past there wasn't this major uptrend coming into the resistance. It was, a smaller uptrend, so they were kind of weak. But now, since we have a bigger uptrend coming into the resistance, we could probably even break it. But either way, we gotta expect it to hold, and maybe it reverses prices at least temporarily. So right now, I'll be looking for prices to reach the high 80s. That's where the stops are, and from there we could probably see a correction take place, because if I clear the drawings and I connect the swings, you can see that we are confirming this channel because we got 4 touches on the bottom. And if I drag this up to the highs, you can see that we're approaching the highs, which it was prior resistance, and that could send prices to the opposite side of the channel. So once we reach the mid to high 80s, there's a good chance we could probably see a correction take place. Maybe not a large one, but a decent sized correction. So we'll see if that occurs. But as right now, there's a good chance it continues to push up higher. It's not even guaranteed to get that correction, but it's just more likely. I mean, this channel resistance will probably hold, especially because this was prior resistance at this horizontal level, and we're approaching the channel resistance. Yeah, there's a good chance we're gonna probably see a correction take place. But in the short term, there's a good chance it's gonna continue to push up higher. So that was the daily chart. Here is the weekly chart. So on the short term, probably next couple of days to couple of weeks, we're probably gonna see the mid 80s. Slightly in the medium term, maybe a pullback, but in the long term, meaning maybe 3 to 4 months out, there's probably going to be continuation towards the upside. So you clearly see there's kind of a similar pattern taking place on the chart. We had a prior dump, and then a trend up, then we had a dump right here, and now a trend up. So this trend up is already taking back most of this drop right here, versus in the past, this pullback right here did not take back this entire dump, but this one is. So there's a good chance this one is probably going to continue much higher. We can use a measure move target. This was all one leg up. We can clone it, bring it down to this swing, and if market makes a measure move target, it's going to come to the 110.84 level. So that is the target that prices are attempting to reach. And you can see there was this prior range in play that prices broke outside of, a failed breakout on the bottom, and we're rallying back inside this range. So this was all just a failed breakout, because prices cannot stay when it pulled back, prices cannot stay outside of this yellow range. It failed because prices broke out, it immediately reversed, and it came back inside of the range. So since we came back inside the range, there's a good chance we might even hit the highs of it and possibly this measure move target. So that's going to occur most likely after a pullback, which is approaching. So I would say the mid to high 80s will probably get there. I'll be expecting some type of pullback, and then that would probably lead to higher prices. So that would be expectation, is that prices, even after a pullback, we see higher prices because of the measure move target, and this was a failed breakout, which can lead to a failed breakout on the opposite side. So there's a couple of reasons why the uptrend should continue even if we find resistance at the mid to high 80s. It's not guaranteed, but there are reasons why we should be expecting it to continue to rally. So that's all I have for RCL on the daily and weekly charts. Thank you for the donation once again. And this is Vee Trades. See you next time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.